So, John, clearly investors are spooked here. What is your response to their response?
Look, it matters to us, the response. We don't like it. We take it seriously. And we believe we're doing the right thing for the long-term shareholder value. First reflecting on Q1 was a good quarter. It was a new COVID high for rides. We had improvements on both the driver and rider side. And obviously what the market reacted to was us saying in Q2, coming out of Q1, where we had the largest spike in COVID cases with Omicron, we want to make some additional investments in the market where we see a lot of upside opportunity for a return on those investments. And I think, what the market wants to hear is more guidance on what they're going to get for that. And so we'll certainly do that in the quarters to come. And it's on us to prove it as we put up numbers in Q2, 3, and 4.
Dan Ives of Wedbush referred to your spending guidance as a 1980s rock star-like disaster. Part of what you're spending on is driver incentives. What about concerns that this could lead to a race to the bottom, a subsidy war with Uber?
Yeah, well, I think that prior statement is extreme and not really tied to what we're doing here. And I'm not concerned about a subsidy battle. There are some fundamental investments we're making. The one that we talked about and that got the most attention is on the driver side. You had a lot of inorganic things happening when you have spike in COVID, whether that's a quick reduction in demand, a quick increase in demand, and the need to add drivers quickly. We are seeing drivers come back organically. In fact, year over year, we had 70% new driver activations. But based on data we're seeing now, there's a lot more demand on the horizon, and we want to prepare for that in the most responsible way to have low ETAs. And investing in drivers and investing in our marketplace technology, to us, is a prudent way of doing that.
You've said the cost of incentives will be passed down in part to customers. Do you have any concerns about alienating riders?
We always think about the price. I mean, that's actually a big part of this investment, is to make sure we have the best ETAs and the best prices in the marketplace. And so I think we're tying a few separate things. When you have dynamic pricing and prices go up, those go down and are paid for by the rider. But we're making a few investments here, that being only one of them.
So investors are also wondering if they've overestimated the opportunity in ride sharing. Are higher prices here to stay? Is ride sharing a utility for the masses or a luxury good? And how much growth is there really to be had in the rider base?
Yeah, I mean, we're reporting on Q1. Again, Q1, we had 40% growth year over year. You had 4.3 million more active riders than in a year ago. And so we're seeing that growth. I think what's not being given credit anymore is the fact that we're coming out of a pandemic, and we need to, in our business, demand turns on a dime and supply takes a few additional months or quarters to catch up. And we want to get ahead of that.
But do you see ride sharing as a utility for the masses, or with higher prices? Is this something that a smaller group of people, only a smaller group of people, can afford?
No, a growing number of people, as I just said, with the 4 million new active riders are going to be turning into it. We just had 2 years where people were asked to wear masks and not be around each other. We're coming out of that. We have continually seen historically, and then now coming out of the pandemic, more and more people turn to this use case. We're going to be bringing back shared rides, which has been missing for the pandemic, which is a lower price product. We bring in other lower price products with Wait and Save. So I'm not concerned. And in fact, the message we're saying is that we see the demand coming back, and therefore we want to invest in supply.
Now, Uber says they're not going to be spending significantly to maintain or increase supply. They're talking about tweaking their algorithms to make things more transparent for drivers, for example. Is this something that Lyft would consider, other incentives to pull those levers to get drivers to come over?
Yeah, this is not pure incentive. So we're investing across the board in the experience for drivers. And so a lot of that is in our marketplace technology, whether that's maps that improve the experience and allow drivers to earn more and have higher utilization, whether that's our pricing algorithm to fine tune specific things that happen at, say, an airport, when multiple planes unload at the same time. And all those improvements pay off as rides continue to rebound. And we feel strongly that these are the right investments to drive the most growth in both the short and long term.
How much overlap do you see in drivers versus, there's Uber drivers that you're competing with for people and for food, but are you also competing with Instacart and Grubhub and DoorDash and Amazon and, Domino's Pizza? They need drivers too.
Sure. Within the category of drivers, there's the highest earnings historically, on average, have been found within the rideshare segment. Also, we typically require newer vehicles, and background checks and driving record checks are always required on our platform. That is not something in these other industries that you named that is always the case. And so there are segments of the population that want to earn more and that have access to newer vehicles and are willing to go those background checks.
Now, I want to move to another story, huge story that we're watching. I know you're watching, the leaked draft opinion from the Supreme Court that signals that Roe versus Wade could be overturned, and soon. Lyft has already come out in support of women's reproductive rights. You've said you're going to defend drivers facing legal action in states like Texas and Oklahoma, where we've seen anti-abortion laws make progress. What's your reaction to this draft opinion, and what more is Lyft prepared to do?
Yeah, it's very concerning. As you said, we've been very clear on our viewpoint on women's right to choose and have their reproductive, health access. And we've made a donation to Planned Parenthood, a significant donation to support their work on that. We were the first to speak out on the laws in Texas and then more recently in Oklahoma. Speaking out is important, as are the actions we take. And so we're working to make sure women who are coming to a different state have access to transportation to make that traumatic experience a bit less stressful. And we'll continue to speak out when we think the rights of our community are at odds with what's happening in the world.
If this issue is turned over to the states, potentially half of states could enact laws like this, and some of those laws would be triggered immediately. Is Lyft prepared to defend drivers on a national level?
Yeah, I mean, the specific laws that we reacted to in Texas and Oklahoma, in addition to disagreeing with the overall viewpoint and believing that women should have the right to choose, there were laws that said that a driver, without them even knowing where they're taking someone, could be found criminally liable for taking someone to an appointment that they had no idea where they were going. That is wrong on many levels, and that is something we will continue to defend our drivers from.
Do you have any concerns about alienating riders and drivers by taking this stand? I mean, obviously, you are running a business. Why speak out on this?
It's important for companies and individuals to speak out when they disagree with something. We've shown that throughout our history. We're not afraid to speak up. We think ultimately doing the right thing for society and speaking to that can also be beneficial for the business. But we care deeply about our impact and our ability to impact the world around us.